Okay, good morning, everyone. Looking at the US stock markets, we are seeing a renewed volatility after the Dow has recovered from the 24,000 psychological level. Since then, it has trended sharply higher towards the 26,300 points. But after 4 days, 4 consecutive days of gains, we are seeing a renewed volatility on the Dow Jones as the Dow has fallen about 0.8%, and also subsequently closed below the 26,000 psychological level. So for now, we are taking this as the potential breakout, the pullback to see how it holds. If the pullback were to violate below the 25,000 psychological level, then we might see further weakness on the Dow back towards the 24,100 points. In the meantime, a recovery will see gains likely to be capped towards the recent peak of the 26,300 points or even towards the 26,500 points level. The weakness on the US stock markets was mainly due to the renewed sell-off in technology stocks, coupled with the decline in energy shares after the crude prices has entered into the bear market territory. Similarly, on the S&P 500, we are seeing the S&P 500 has recovered from the 2600 psychological level. Since then, it has headed towards the 2815. It has breached above the 2800 towards the 2815, but the lack of follow-through by interest has seen the S&P 500 has pulled back. So for now, we are going to monitor to see how the S&P 500 holds above the 2750. If the 2750 level cannot hold, we might see further pullback on the S&P 500 back towards the 2700 psychological level. In the meantime, any gains for now will be just limited towards the 2815 on the S&P 500. So based on the crude prices continues to tank following the recent consolidation breach below the 66 to US dollars barrel level. Since then, we are seeing the crude prices slide to for the next 10 consecutive trading days towards the recent low of around the 60. So for now, it formed a hammer candle above the 60. Let's see if there's any recovery above the 60. If we can see some of the recovery on above the 50, above the 60, we might see further just a mild technical rebound on the crude prices with gains likely to be limited towards the 63 US dollars barrel mark. Moving forward, we'll likely to see we'll be monitoring how the uh, OPEC's decision on this next meeting. If OPEC were to cut its production further in 2019, then we might see further a recovery on the crude prices back towards the 63 or even back towards the 66. But if OPEC were to just maintain its production, then we might see the crude prices continues to slide below the 60. The weakness on the crude prices was mainly due to the concern over the renewed supply glut, whereby the OPEC's production is at near a record high, whereas the concern over the global economy growth has uh, has also caused the concern. The spill has also caused a spillover effect over the concern on the demand for the crude prices from from China and also India. Okay, some updates on our local front. The FMKLCI has earlier recovered from the 1670 level. Since then, we are seeing the key index has recovered back above the 1700 and subsequently traded above the 1700 level over the past 2 weeks trading period. However, we are seeing a renewed selling pressure on the FMKLCI as the key index has formed the bearish candles. On the 8th of November, we are seeing the key index gap up, but it could not hold on to its gains, and subsequently it gave up most of its intraday gains. And the next day itself, we are seeing the gap down formation, and the FMKLCI has wiped off the previous sessions again. So for now, let's monitor to see how the key index holds above the 1700. If the 1700 level fails to hold, then we might see further weakness on the FMKLCI back towards the 1670 level. Of the US futures is really a negative like 50 points. There's a high chance that the FMKLCI will likely to gap down on today and likely to tank below the 1700 level on the FMKLCI. In the meantime, should there be any gains, any unexpected gains, any like last minute recovery on the FMKLCI, gains will likely to be just capped towards the 1730 or even towards the 1740 level. On the FBAM small cap wise, we are seeing also a renewed volatility after the FBAM small cap index has recovered from the 12,215 points level. It has recovered towards the EMA 20, but it cannot hold above the EMA 20. And on last Friday, we are seeing the FBAM small cap index has formed the bearish candle. After forming the dodgy candle or the uncertainty candle, we are seeing a new direction on the FBAM small cap index that we are expecting the lower liners to likely to pull back towards the 12,700 points level. On stocks wise, some of the stocks that we can watch out for will be Burmans Auto. Burmans Auto, earlier we did mention on this counter that we're expecting for the breakout above the 1.95 cents, but it did not breach above that. And subsequently price traded on a sideways manner. And on last Friday, we are seeing price has breached and also closed above the 1.95 cents a level. So for now, we are expecting price to trend higher towards the 2.05 cents or even towards the 2.16. Your stop loss point will be located towards the 1.80 cents level on Burmans Auto. With price breaching above the 1.95 cents, we are seeing the MACD histogram has expanded positively, heading towards the 0 level, whereas the RSI has risen above the 50 level on last Friday as well. On KAB, price has been traded on a sideways manner from the 31 cents towards the recent low of the 22.5 cents level. After hitting the 22.5 cents level, we are seeing price has recovered and subsequently traded on a sideways manner, hovering around the EMA 20 level. But recently, we are seeing some of the accumulation was taking place as we are seeing some of the higher volumes being traded over the past 2 to 3 trading days. And on last Friday, we are seeing a good bullish candle was being formed on our KAB as price retested the EMA 60 and EMA 120 level. For now, we are going to monitor for this short-term consolidation breakout above the 26 cents. Should price breach above the 26 cents level, at least for the near term or for today, we could expect further upside towards the 27.5 cents or even towards the 28.5 cents level. The stop loss point will be located below the 25 cents level on our KAB. With price forming the bullish candle yesterday, we are seeing the MACD histogram has extended another green bar, whereas the RSI has risen above the 50 level on last Friday. On Fajar, price is still in a downtrend of formation, so any recovery from now will be just taken as a technical rebound play. Fajar has earlier recovered towards the recent high of the 56 cents level. It subsequently rejected the EMA 120 and continues to trend higher, pulling back towards trended lower and pulling back towards the 36 cents. 36 cents will serve as a very strong support level for now. Yes, earlier finally found some support along the 36 cents and consolidated over the past couple of weeks. Earlier on also, we did see price has pulled back towards the 36 cents and subsequently consolidated before the recovery to resume. We are seeing again price pullback and traded on a sideways manner 36 cents. And on last Friday, we are seeing a good bullish candle was being formed on Fajar that we are expecting that we're going to monitor for the breakout above the 39 cents. Should price breach above the 39 cents, we are expecting for the technical rebound of Fajar to trend towards the 43 cents or even towards the 44.5 cents level. Your stop loss point will be located below the 36 cents level on Fajar. So any recovery from now will be just taken as a technical rebound play until we can see a higher low formation. Only we can confirm for the recovery on Fajar. On AZRB, price has again pulled back towards the recent low of around the 30.5 cents level from the recent peak of 55 cents. After the recent pullback towards the 30.5 cents level, we are seeing price has subsequently staged the short-term consolidation or breakout above the 36 cents or 36.5 cents level on last Friday. With the breakout above the 36.5 cents level, we could expect further mild recovery on AZRB. Firstly, towards the 38.5 cents, that will be the intraday target, followed by the 42.5 cents level. Your stop loss point will be located below the 35 cents level. If you can take further risk, the final defense will will be located towards the 33 cents level on AZRB. Last company for today will be TRC. TRC Synergy has been traded on a sideways manner since the recovery above the 43 cents level. Following the recovery above the 43 cents level, we are seeing some of the accumulation was taking place on TRC with some of the higher volumes. But the next day itself, we did not see any follow-through by interest. So this could be taken as the accumulation phase on TRC that we are going to monitor for the breakout above this sideways or the consolidation of the symmetrical triangle formation above the 49.5 cents level. Should price breach and also close above the 49.5 cents, we could expect price to head towards the 53.5 cents or even towards the 57 cents level. Your stop loss point will be located below the 46 cents on TRC. If you have any questions, you can put into the chat box and I will reply you shortly. There's one question here on Kajaya. Kajaya alert, we did mention that we're going to monitor for the breakout above the 1 ringgit and 18 cents level. It did breach above the 1 ringgit and 18 cents, and subsequently price has staged a healthy pullback. So this could be the good breakout pullback towards the 118 and a potential continuation pattern for price to head towards the 129 or even towards the 1 ringgit and 33 cents level. The first target price is at 129, followed by the 1 ringgit and 33 cents. Your stop loss point will be located towards the 1 ringgit and 18 cents level. If price cannot hold above the 1 ringgit and 18 cents, then this is a failed breakout pullback and a continuation breakout formation. So let's monitor to see how price holds above the 118. If there's no further question for today, then we'll end the morning briefing. Thank you.